be fine. Any questions, just put them in there as well. So what I want to do is I have a wide range of markets to look at, and it's end of the month, so or beginning of the new month. I think we can have some fun. I've cleaned up all my charts just to make sure there's no predetermined levels or predetermined structures to influence my thinking. So it might assist you in terms of how to prepare for the week ahead, and depending on what time frame you trade, and also prepare potentially for what could take place this whole month. But remember, anything can happen in the market. So we trade what we see, we prepare, but we do trade what we see. So I got currencies. I've also got a commodity, and I've got indexes. So I'm going to start with currencies. So I am on the daily time frame, and I just want to make sure that all good. So yeah, the currencies that we're looking at: Aussie, USD, CAD, yen, euro, pound versus dollar, gold, S&P 500 when you get to the indexes. Also UK 100, and we've got the DAX on. So I'm going to double check something very quickly before we get in. I'm not getting a feed on my video. That's strange. Okay, all right, I think we should be fine. Let me just do this. Okay, all right, I'm not sure what that was taking place there, but you're ready to go. Now, Aussie versus the dollar. This is where the market ended up on Friday. Let me just pop up quickly the monthly chart. Have a look at the monthly chart. I mean, you can clearly see, if we were just to take a snapshot, we were in a downtrend. But something that is interesting is that we come into potentially an area where on the monthly time frame, the bulls might have an interest in creating a double bottom. And that would be in this area here, which would be the low of, that's the low of October 2022. Okay, so I've gone to the monthly time frame. That's why the time frames might be different. But the low of October 2022, that's 1st of October 2022. Now, the bulls might want to come and create a double bottom there. Why would they create a double bottom, or the opportunity for them to reverse the market? If we look back to here, this was that famous COVID 2020 period, March 2020. But straight after that, I mean, bulls came back with force and created a reversal. Now we're coming back to the same area where we had 3 months of bullish behavior way back last year, and getting back to that zone. If you ever look at it, the low of the previous month, buying into it, dodgy candle that we had. Bears controlled it, but still a dodgy, so good buying. We might still get a little bit more selling to get to that level. But in this zone, if you start to see a reversal signal, if you're trading off the daily time frame, weekly time frame, be cognizant of that potential double bottom. If you go to the daily, now remember, as you go down time frames, you are more interested in what's taking place within the time frame. So if you trade in intraday, although we have a potential area where the bulls will come and create a double bottom down here, I mean, it's too far off for you trading intraday to be concerned about. You should be worrying about what's taking place in the day. But if you're trading on a daily time frame, then it's something to bear in mind, because your objective, if we do get into a trend breakout, is trying to hold your trade for long. If we get reversals like we've been doing, of course, you'll have to make decisions to get out pretty quickly. But assume the bears were strong enough. I mean, a bit of a problem on Friday, ended up as a bull candle, although they sold off into the close. But assume the bears were to sell off and break beneath this low, if you are in a bear trend on the daily time frame, then that level that we had is something to bear in mind, because you might get some kind of a pullback or reversal there, which you need to manage your trade. But going into the week, yes, tails on top, bears pretty strong, but of course the bulls control the candle. So bulls are pretty strong. That's a magnet that can pull the market down. If you're a bear, you want to sell off and try and trigger that sell. Bulls, of course, want the market keep going up higher, but all the way in this zone here, all the way in this particular zone, you can see how the bears have been selling off. So even if you are trading in the day, if we get to the high of the day, just be aware that bears can come in still and create a reversal and sell off as you carry on. So longer term, there's a key level to watch. During the day, watch out for reversals, bulls control, bears come back into the day. Key levels to watch, of course, this low and the high of the previous month. Canadian, if you're watching that, look at that huge bull candle that took place on Friday. The news announcements, etc., coming in, but still the bulls control that. Strong bullish price action up to this level where we broke above this. These were key levels which we broke above in the month. Bears, of course, sold off, but this bull candle kind of changed the structure of the market. If the bears had been strong, even though we had bullish price action, the market would have probably stayed either trading range or sold off. But that reversal by the bulls was pretty strong. So the bulls have created for themselves a potential to accelerate up to break above the high of September going into October. But let's have a look at the monthly. That can show us an interesting picture. So have a look at the monthly. Just think of how strong Friday ended, just as we're looking at it now. But look at the monthly time frame. We are in a trading range, although we saw that in the month of September we broke above these highs, or market broke above those highs and pulled back, which shows bullish strength. But if you just look at what's taking place in the year, have a look at this. This is March. Okay, from the high of last year, bears sold off. In the beginning of the year, big bear candle, bulls came in, and then we had this attempt by the bulls to accelerate up, which became a decent enough reversal signal for bears. Now, if you are a bear in this market, okay, if you are holding on, bears would have sold here. That's the structure, that's the principle. Bears would have sold here, most likely put their stop here. They might have tightened their stop to there. So, if you're trading on this time frame, you kind of holding on saying, well, that's the key level. I'm sure there might be acceleration down. And, market is just above your entry point in that zone. Would you have come out? Well, there is no decent enough reversal by the bulls for you to have said, well, I'm going to come out of this trade. It's just like if you're trading it on the daily, on the 5-minute, hourly, if you took that trade and you put your stop there and then tightened to there, you kind of have a choice to say, do I hold on or do I exit? It just brings me to one interesting point. In a couple of weeks' time, there is a traders panel discussion. And one of the things that I'm going to be talking about is this concept of risking profits to make profits, sacrificing profits to make profits. Now, what that means, if you haven't heard of it, is at some point, you are looking as a trader to get into something like this. Okay, so as a bear in this market, it could have been bullish, okay, but I'm just using this example. So in this example, you are hoping that whatever trade you take, if you're a bear, you've sold, that somehow it accelerates all the way down. But after you've taken it, you do not know that that's what the market is going to do. Market can reverse and stop you out. But if your thinking is, I might get rewarded and have a huge sell-off, in which case I want to hold on to my trades and maybe scale into winning trades and increase my profits. When I am here, I am willing to hold my trade up. Hold my trade and my stop is up there. And even if I have to watch it getting pulled back and the profits that I would have made at some point. So let's jump to here. So you've taken that and you don't know if you get that, but you might get that if the bears are strong. So you've taken it, you put your stop at the correct place, maybe tighten to there a little bit. And, at some point you were in profits. So, we're looking at the monthly. So forget about it being monthly. It could be hourly, 4-hourly, whatever it may be. At some point when you took a glance, oh, you're in profits, and then kind of went sideways. Then when you're down here, said, oh, that's pretty fantastic. My trade is working, but I don't have anywhere to tighten my stop to, so I'm just going to hold my stop. And then the next day, candle, bar, whatever, you get something like this, and you're like, ooh, okay. Have the bulls reversed completely or not? Now, if you're seeing that taking place and you're hoping that the market can accelerate down based on what you've seen, then you got to be willing to sacrifice profits. So all year when the market is doing this, you had open profits. Now the profits are going, but you thinking, well, the structure is still strong for the bears. Maybe I may still get acceleration down. So I'm going to hold on. If the bears accelerate down, break beneath this low, I can tighten my stop. So you're sacrificing profits to make profits. You can get stopped out. This week on Wednesday, live trading profits, we're talking about some trades that was in it. At some point, I was in pretty good profits with those trades. But then I thought, let me hold and see if I can get more. Well, it pulled back and I eventually got out with a little bit of profit. But I was hoping on the structure that market will accelerate it down. Had I, banked the profits and the market accelerated down, I would have been pretty disappointed. So it's a concept. It really just works into our psychology. You can get stopped out, and that's the issue. So it looks beautiful after the charts is printed, but you could have been stopped out. I mean, taking that trade, stop there, could have been stopped out, done a couple of times, and eventually get a trade. Anyway, we're going to be talking about that in the traders panel. Don't want to get too sidetracked about risk and profits to make profits. So US CAD on a monthly basis, the bears are still controlling the market because of this lower high here. And if you have a look at what took place in the month, we don't have significant or evidence that the bulls have completely reversed the market. We are in a trading range. So I still think we must expect a little bit more bearish price action in the overall month. However, when you get down to daily time frame, if you trade in that, we cannot ignore that going to the month into Monday. Would you buy that as a bull? Well, as a rule, I don't want to buy above an outside candle because it signifies just a huge trading range. So it might accelerate up, and there might be huge failed, the breakout might fail and come back all the way down. Now, because it's so huge, if you take it and you put your stop here, it might just go sideways. So I would be a little bit cautious. If you're going to take it, actually, your stop would have to be down here, and anticipate that you might get a bit of a pullback, maybe double bottom. Or if it goes your way, if you've taken that trade, low probability, anticipate that the bears had created this strong sell-off. I mean, all the way down here, no pullback. If you ever look at it, we didn't take out any of the highs until we go down here. So strong bearish price action. The bears will come back and defend that price action. Yen, my little video is right in there. Strong bullish price action. By the way, the EMA that we're looking at is the 10 EMA. 10 EMA I just use to help us indicate the strength of a particular trend. So once the bulls took over the market after this higher low double bottom, interesting enough, we're just talking about CAD. Let me just point out something. The difference between this candle that was printed on Friday and even this huge candle here, if you just look at these two, this is an outside candle, high probability that any breakout might fail. This is not an outside candle, so higher probability that there might be follow through. If we look at here, high low double bottom, big bull candle, not an outside candle, higher probability that there might be follow through. Okay, I was looking at the bullish, but let's look at this outside candle. Okay, you can sell that, but expect it to fail, and it does fail. But it's in the wrong place. So maybe that's not an appropriate example. So point was, get a big bull candle, just have a look to see is it outside candle or not an outside candle. But in any case, from there, we've had strong acceleration up. Every time we got back to this EMA that I used to indicate strength of a trend, market just reversed and kept going up. Tried to close beneath it, reversed, close beneath it, reversed. So bulls have been pretty strong. I mean, you might have other EMAs that you use, you probably see the same kind of thing. If you ever look at the monthly, look at that huge bull move. Now, bulls were pretty strong, deep pullback. And in this pullback, a reversal by the bulls, because the bulls, of course, want to see a second leg. The bears with this sell-off would have expected, or if you're a bear, you expect, well, okay, we see this is pretty strong. The first time we get down to the EMA, we get a doji, we fail, but we can create a lower high. But the bears have not created a lower high. So the bulls, having a look at the market structure, want the month going to October to break above this previous high, which is exactly a year ago, October of 2022. So bulls want to break out above that and just keep going. And you can, do those extrapolations in terms of a measured move, how far they want to go, but we're not going to do that now. At this very juncture, the bears want to come back in. The bears are not expecting for the market to collapse. They missed the opportunity here to put a full candle beneath the EMA, like we had down here. Bear candle, several candles beneath the EMA. So gave them an opportunity to sell off. It didn't do much, but at least a double top. So going into the month, I would expect a bit more bullish price action because of the structure of this, not an outside candle, pretty strong. So bulls will carry on, want to break above this and just keep going up into the skies. Bears, of course, will try and create a double top. So when you get such strong bullish price action, at some point, the market will fail. Now, when the market fails, after such strong price action, you don't expect it just to collapse completely. The first time the market collapses, it's most likely some bulls taking profits. And of course, bears coming in to try and reverse the whole structure. But after that, there will be some resumption. Market might go straight up or it might go sideways. So any sell-off that might occur, there will be at some point, at some level, the bulls coming back because it's pretty strong at this moment. Euro versus the dollar. Let's try and speed up a little bit. Okay, this is on the daily. Very strong bearish price action all the way from July. Just the last 6 months, bears have been selling off on the daily. Again, we're staying within the 10 EMA. We had an attempt to break beneath the channel, failed. When you have a failed breakout beneath the channel, you might get bullish price action to get up to the top. Failed breakout below, bulls might come in, but when they get to the top of the channel, can expect there to be some form of reversal like we had here. So before we had this larger frame, you could have looked at how price was contained. I'm just going to change the color for us very quickly. Okay, so in the red channel, it was a tighter channel. tried to break out above that, failed, tried to break out above that, failed. Eventually, we came down and tried to break out with the bigger channel. So market may still, just come off the 10 EMA, but if the bulls are strong enough to accelerate to the top of the channel, you can expect a reversal, a bouncing off, at least the first time we get to that. We've got some lines. I'll just take out a quick look at the monthly. Okay, so on the monthly, big sell-off, by the bears, pullback. Bulls created a decent enough reversal, not out of this first candle, but out of the second bull candle and the follow through. This first candle, it's a dodgy, it's not a reversal candle, it's just possibly a pullback and a pause like that. Pullback and a pause, bears could have carried on. But this second candle and the one that followed through, is what created the reversal pattern for the bulls. Now, if you're buying this as a bull, the issue of the stop always comes into place. The stop has to be way down here, until you get a retest, or if from here you get a higher low double bottom. So if you're buying, trying to hold on for long, remember we're looking at the monthly, it can appear in any chart. If you want to buy before you get a proper higher low double bottom, the stop is going to be here. If you get acceleration up, then you can tighten your stop. Otherwise, trust me from experience, you get stopped out unnecessarily quite a few times. By the time it goes your way, you're pretty frustrated and you end up missing a big trend. It's like saying, well, I've seen a bear and I want to sell here. You're rushing to do the selling unless you put a proper stop way back up there to just protect yourself. So in any case, bears want to keep on selling. Now, if you're a bull, if you're a bear, would you sell this? If you're going to sell this, you would have had to try and sell up here and put a wide stop. Once it starts to go like this, you're now into potential breakout mode. Potential breakout mode means the market can pull back. So if you put an order here, it might get triggered in, and if it pulls back, if you're comfortable with it through your stop, that's fine until you get a reversal, perfect. Or wait for some form of a pause, some form of a signal for you to try and jump in. So, in here, taking a trade, that probably would have been a good area to jump in and take a first trade. But anytime after the breakout, you can expect that the breakout can fail. So that pause is an attempt by the bears to make it fail. You wait for that and see if you can get beneath that. That's another pause. That's another pause. So likely, higher possibility after the pullback for you to jump in, because a pullback, can just go against you. And unless you've got a wide stop, it's probably better just to hang on a little bit. So if you're prepared to put a wide stop in the market, this is a monthly, assume it was a daily, we'll look at it, then that's fine. Otherwise, just wait to see if the market pulls back, whatever form of a pullback, could be a deep pullback, could be a one buy inside candle, then you can look to sell beneath that. Okay, so we've kind of covered that a little bit, bearish on that. Cable, very, very bearish. That is interesting. Look at just the acceleration of that. So that bull candle, almost like we spoke about earlier, is the bulls are trying to reverse the market, but that's not a reversal until we've closed above the EMAs. Then you can say, okay, they're trying to reverse it. Maybe we'll get a higher low double bottom to buy. But so far, this market is pretty bearish. If you wanted to say, okay, I'm going to sell and try and hold as long as possible after this, issues where do you put your stop? You have to go back and find where to put a stop. A conservative stop will probably have to be all the way up here, or you could put it here. If you put it above here, you're risking getting stopped out by the bulls trying to make a reversal. So yes, you can look to take it, but you need a wide stop. Or alternatively, wait until you get more evidence of bears looking to take over the market. However, in the day, when you get into the day, you can be looking for longs from the low for the market, try and get to the top or get to the high of Friday. If you see a reversal pattern, you can pop onto the daily and say, oh, maybe the bears are trying to reverse. You get a reversal pattern and the bears start to sell off. You can also need to jump into that. Gold, how are we doing for time? Okay, a few minutes to go. Gold, massive sell-off. Now, here's what's interesting. I'm just going to do this just to try and correlate this to what I was saying earlier on. I hope you can see that yellow rectangle. So if you just look at this structure here, at some point, so this was a bear candle. So bears would have said, well, okay, I'm just going to, whether you sold and you continue to sell, I'm going to put an order beneath here. So you're trading off the daily. And where do I put my stop? Well, the correct place to put your stop is all the way above here. But you could have said, well, I'm going to go 50% of that breakout. I'm able to put my stop there. Excuse me. So breakout above there. There's 50% of the breakout. I can put my stop here or above the previous day instead of all the way up here. So that's fine for the day. But if you're trading during the day, which kind of relates to what I was saying here, that if you're trading during the day and you see that the bulls are strong and you get a decent enough bullish price action, then you can buy, right? And if you come back, or if you're not in the market, but when you do come back, you see we're up at the high of yesterday, of Friday, and you see a reversal pattern forming here, and it's good enough reversal pattern, you can still look to sell, still within the day. Okay, it went up, came back, that could still repeat itself over that high. It's the same thing that just by looking at this is what took place. Market opened here. At some point, whether it went down a bit or came up, it went all the way up to test the high of the previous day and try to break above it and fail. So if you've got a reversal pattern because of the strength of the bears, if you're in the market, then you could continue to sell and might have been rewarded. But again, it depends what time you're in or not. All it means is if you're not in the market and you do come back and you look at your charts and say, oh, hang on, there's something taking place. So whatever beautiful move you missed in the morning, you might get an opportunity later on, or vice versa. So very quickly, indexes. Okay, what I'm going to do with indexes, let me just pop them up on the monthly because we are running out of time, but I think we'll be able to have a decent enough conversation. So monthly, S&P 500. Interesting enough, if you trade the other US markets, the Dow, NASDAQ, there's some correlations because some of the stocks are all included in the S&P 500, the big ones. So as far as the bears are concerned, well, after this big bull run, they managed to break the trend line, and now we have a potential lower high. So the lower high, we have a lower high, so the potential lower high. It's already a lower high, 2 candles. So the bears want the market to continue to sell off. It's a good enough signal for the bears that they're prepared to sell here and put a stop up here. Okay, why would you put a stop up here? Because the bulls can still come and try and break out above this, and you might get another reversal up here. So it will be a lower high still, but higher than that. Okay, so don't put your stop here. So I'm pretty bearish, thinking of these markets to depend now as we go through each day. I mean, if you got a bull run every day, you got to go long. But if you got market selling off, you got to do all the best that you can to jump in to the market. So I'm bearish on those on S&P 500, and that kind of correlates. This is on the daily time frame. So if the market starts to sell off, sell with it. If there's reversals, which you're likely to get with all these dodges price action, bullish price action, if it's strong, jump in. If not, just wait for the market to sell off again. FTSE is pretty interesting. We are in a trading range. Unlike what we saw on the S&P 500, when you look at this, you kind of say, well, who's in control? Who's setting up what? So when it's not clear, it's trading range price action. So you can expect the market to rally up, you can expect to sell off, without any side distinctly taking over the market. So trading range price action might just carry on, until we get someone strong enough to break out above. The bulls are strong enough to break above the high, breaking above trading range, expected to fail. If they break out beneath here, even test that, expect that to fail. So trading range price action expected more on the FTSE. As you can see, I mean, if you're trading intraday, there would be opportunities. But if you're trying to hold on to it on the daily, what should you be doing? If you look at it and say, well, listen, I think I'm going to sell. This looks like a lower high. I'm going to put an order here. Well, if you do that, you got to put your stop all the way up here and hope you get acceleration. If you don't, then just hold on to it. If we do get down here and close beneath here, you can always start stop. If you get down here and you fail and the bulls come back in again, because it's trading range price action, again, you got to remember, failed breakouts above and below are pretty common. So nothing distinct here for me to say I am bullish or bearish. I think it's trading range price action. And finally, on DAX. Bears trying to control the market, failed breakout above that. It's a little bit more clearer structure on the DAX, on the German market, than it is on the FTSE. So on DAX, I'm kind of thinking there's probably a lot more selling to come. Are the bears in control? I don't think the bears are in control. The selling will simply be because we're coming off a failed breakout of the high. Of this high, this was in November 21. So, it took a long time, but we did get above that and failed. So there might be a little bit more selling. Bulls might create a high low double bottom before we go any further. I think there's a little bit more selling on the German market as we go forward, a little bit clearer than we had on the FTSE. So let me check if there are any comments or questions. There is nothing. And I think I probably would have covered quite a bit of ground. All right, guys, thank you very much. I hope you found that useful. And if you're available, look forward to seeing you in the trader panel, where we're going to talk a lot more about the psychology. Thank you very much. Thank you for your comments. Sincerely appreciate it. We shall see you again.